Aloha, ladies and gentlemen. Bubbles Stock Market Show. The closing for Tuesday, October 21st, 2025, 3:38 p.m. Eastern Standard Time. Let's take a look at the Mag 7. So Apple beginning its day and trading in the top 10% of the previous big bull candle. It looks like it's having a bit of a hard time getting closing over this 265 and some change. Then over here on Amazon, we had quite a big of quite a gap up. Closed over here yesterday, gapped up here into the 9-day moving average, got as far as up here, pulling back to about here now. Which this bouncing up off the from right around the 200-day moving average. We had this kind of a longer wick here. All these sort of giving us the impression that it might be putting in a bottom right here on this 200-day moving average. And according to yesterday and today, it did pop up, but it could go all the way up here to this like 230-ish range, and it's still just sideways. It's a lot of movement up just to go sideways, which if it keeps going up, then it will, at some point it will come into an uptrend. I'm just pointing out that it's on the low end of its range right now, and it's a far run to the top end of that. We'll see what happens. Microsoft, not much action at all. We're just almost a doji. Nvidia, yeah, looking sideways. Man, it's just a sideways trender at the moment. Netflix, more towards the top of its range, but it's definitely the sideways range. And just trading in the top 10% of the previous big up candle, but not having a lot of momentum to move around. The same thing with Meta, where just at the top of this range, but doesn't look like it has a lot of power to poke through the 200-day moving average at the moment. Google still in this uptrend, this long wick. If it closes the day like this, we got 19 minutes left. It looks like maybe it's building some momentum to go to the upside if all the buying pressure is coming in here when prices are low. And we're back to Apple. Let's take a look at the overall, all different markets. Yeah, not much of a surprise on these two, right? This candle in relationship to the previous day candle is pretty similar on, like, I think it was Microsoft and was it Meta? There's a few that look like this just on the top of the previous bull candle, trading at the top of that range with the Dow really pushing ahead quite a bit more and more selling off with the Russell. Oil still kind of at this bottom of its range. Bitcoin almost wide trading range today, but very small body candle at the moment, which is a green candle, so trading a little higher than it opened at the moment. Silver continuing to kind of come down, same with gold and the dollar going up. We'll switch over to these sector ETFs. Let's go through there relatively quickly. Where are my sector ETFs? There we are. All right, we'll start off by looking at the Qs. 1 year from left to right, each candle, red or green, represents one trading day. And similar to what we saw with futures, same thing with the spiders, diamonds. Same thing on the future, pretty similar candle. IWM, kind of the same thing, right? These representing the replicating or mirroring. I'm not sure who mirrors who, or if it just happens to be that no one's mirroring anyone. They just happen to be roughly the same size and pattern. All right, communications, those stocks starting to look like they could be moving up, but not this candle isn't super exciting, but we got our moving averages turning up, kind of conversing together with a 9 day turning up. We're on top of the 20 day, and it could kind of keep going up. XLK having a difficult time getting back to the top of this, but it is getting back. It's just hitting, looks like it's hitting some resistance around that 289 or 290, whatever the price that is. And XLF, same thing, having a hard time getting to the top of, well, I don't know if it's having a hard time getting to the top. It's having a hard time staying at the top. It's pulling back right here, this 9 day moving average. Transports hitting this resistance and pulling back just a little bit, pulling back. XLE looks like we're getting some resistance at this 200-day moving average where we got the 9 day right under it. Real estate still sideways, but in the upward part of this. Let's see if it's gonna break above this or go back down. SMH semiconductors, a little bit of a down day, but still looks like it's doesn't necessarily look like there's any change from an upward trend. XLP for the consumer staples. The shorter term moving averages are looking strong to the upside, but it's going to have to deal with a lot of resistance right through that 200-day moving average. It's basically sideways right now. The VIX, the VIX has dropped, getting we're at 1761 at the moment, so volatility is coming down. I hope it gets down here to this 15 area. Yep, I hope it gets back down into here. And then I'm going to put some trades on. I'm going to go along some calls on the VIX once it's down lower. Maybe some. I'm going to look at doing a combination of long calls and long debit spreads, which maybe is redundant to say long debit spread. I could just say long spread or debit spread, whatever, whatever. So volatility, even though the volatility in the stock market, measured by the VIX is going down, I don't think volatility is really going down. I think we're going to make volatility great again. I think we're going to stay there for a little while. I hope so. At least it's better to time volatility and it's more lucrative. And XLY for these consumer discretionary turning up. We got a really solid candle today and pushing up here. Looks like it's getting in some resistance area here. So let's see what's going to happen through this resistance area over the rest of the week. And XLV, the healthcare. Yep, it's bottoming is still moving up. Looks like it's going to be hitting some resistance right into this area here, but looks like it could push through it. We'll see. We'll see if it's got enough momentum to push through it. XLU for utilities pulling back. Doesn't necessarily seem like an upward trend is broken though. Yeah, we'll have to see what it does around the 90. Got this kind of pivoting around the 90 where it came up, tested that, and realized it's going to go higher, but now it's coming back down to test this 90 number again. So let's see what goes on there over this week. Materials did start it over here, and we're not too much higher now than where we were. And you see our 200-day moving average is almost flat, but there's a slight downward drop in it. So overall, kind of getting some stock action like that. We did drop all the way down here, rallied up here, and then it's kind of been since around in this area it really started. Is where, well, maybe even here it really started the sideways action. A little lower, bringing it down, but that's what we're dealing with there at the moment. Okay, we went through all those. How about what about what about oh, let's just take a look at. Let's take, we got 10, 11 minutes left of the market. So ASTS still is having a bit of a down day. I think finding a good entry point in the stock, I think it could be, I think it's going to be lucrative. We'll see how far it pulls down to. We'll see if it's going to pull down here to the 20-day moving average, and if it does, how's it going to behave around there? But I would think that there's probably at least one more run to 100 in the stock based on the whole stock market's not falling apart right at the moment. And if it falls apart, if it doesn't fall apart, we'll probably go back up to 100. If it does fall apart, I don't know when it will go to 100. Tesla here is kind of moving sideways in a way, but you can see it's kind of at the top of this range here. These candles right here at the top of where this range was, just getting in this resistance zone right in there. Palantir, in a way, has a similar look for the last X amount of days as Tesla, where these moving averages are kind of coming together, doing the sideways thing. We're kind of chopping around sideways. Seems like that it has Palantir has that look as well. Hood starting to gain that, but it dropped down here to the what was that 125 or so yesterday. This is blocking from knowing if that's, I guess it's a five. And we're down a little bit today, but we gapped up yesterday, down a little bit today for that. SMCI definitely not giving our explosion after this cup here. Made his little handle, but probably have another run up to 60, same as this might have another run up to 100, assuming the stock market doesn't collapse on us. FCX still trying to recover, but it I guess it did recover most of what it lost in this big drop due to bad news. It's recovered most of that and just kind of doing the sideways cruise at the moment. BTCI running into some selling pressure right at that 9-day moving average, same as IBIT. Yesterday, I'm not sure if you were able to see, but let's see if I can pull it up for you. Put together a I put together a trade on IBIT yesterday that I did not do. It was just a theoretical trade. I hope no one did it because you need to have enough buying power. You need to have enough cash. Just because you can put the trade on doesn't mean you necessarily should click that button and maybe take a position that has more risk than you know how to handle or that you can handle, whatever the right word is to not offend you and get you to understand that there's different risks and that you should be able to manage the risk before you put the trade on. Or if you realize, hey, I'm going to lose some money, I'm going to learn how to manage risk in the meantime. I guess you can possibly, maybe that's something you want to do. I don't know. I don't know if you want to do that. It's not really how I want to handle things, but sometimes that's how I do it. Hey, let's get that out of there. Let's see if I can, hopefully I can find what I'm looking for. I think I found it. Yeah, boom. This is it. So yesterday on the old IBIT here, we set up a strangle with selling a 55 put and a 70 call that was netting after commissions a little under 170 with needing a little bit over 600 buying power. And I think it was about 25 days from yesterday, 25 days to expiration. And if you hold that to closing, assume that nothing was assigned, there's no adjustment, it'd be almost 27% return on buying power, which is something to be excited about, at least in my opinion. Something I get excited about. 20%, 27% return on buying power in 25 days. I like that. That's why I like strangles on the right stocks. Can't always do that. I did get filled on the call side of my strangle with ServiceNow today with this big bump up. I got filled up here. And if I would have held out for more premium, it's possible I could have gotten more. It's possible. It's not, I can't say it as a fact though, because this particular stock, the bid ask spread is so big that there's times when the mark is it looks really good to me. Let's say the mark's 300 and I put on a trade to get 300, the mark's at 300, and then all of a sudden the mark changes to like 270 or 250. And then some in the past, I learned by chasing it, I changed my limit order to 270, then it changes to 250, and I change it to 250, then it goes down to 200 or something like that. Right. So there's this like play chase type of thing. So I never quite know like where only once or twice I felt like I was able to really time kind of the top of getting a fill on now. But I'm gonna keep working on it. I want to get that better fill. Keep getting better fills. So I have a one half. I got the call side. Now I'm trying to sell the on the put side. So that is going on with that, and ideally everything goes according to plan. The both contracts will expire worthless this Friday at close of business. We got 5 minutes left in the trading day, and we see both the Qs and S&P 500. They're just having a kind of light trading day with price action at the top end of yesterday's bullish candle. We got the Russell. We looked at these at the Russell. I don't have the Dow Jones. Excuse me, I don't have the Dow Jones here. Mo was down quite a bit today. You could have picked this up at a pretty good price or got filled with some pretty decent premium by selling put options on this when it was down here really low. And just as a reminder, based on last week's fundamentals, Mo is probably the out of these stocks that we have on here. This is pretty good though too. Let's see. Is oh okay. Overall, based on like looking at all the fundamentals of between the Mag 7 and then we got Coca-Cola, Mo, FCX. I think this is Barrick Gold or forgot what company this is, some gold company. And good. Look at that peg. EBITDA, enterprise value above EBITDA is looking pretty good, pretty profitable. But still, it's like, dang, look at this. Mo really takes the cake to it. It's like we're just over 10 on the EBITDA. PE is well under 25. Peg is almost 3, but I mean, I think it's a pretty good deal. And then going down to what was the lowest it traded today? Lowest it traded today was $62.95. Picking this up at 63, I think anywhere around there is good. It's even a good price right now at 63.79. I think it's pretty reasonably priced for that company. Coca-Cola shot up today on earnings. Good for Coca-Cola and good for my short strike at 60. So that's nice. Probably lightened up on some buying power for your good old buddy here. But that's what we got. We got 2 minutes left to the stock market, and I. It's funny that it's easy for me to say I'm not surprised, but there's only three ways that it could go: up, down, or sideways. And there's different extremes, like how up can up go and how down can down go in one trading day. And how long is that run gonna to the upside or downside? How long is that gonna last for? How long is it gonna go sideways? There are these different things, but what I what I what I have been gathering of the stock market is that one of the first things I think, oh look, the MMRI from when I checked it this morning down just a little bit. Did they update this? Yeah, updated it yesterday. So okay, it was 244 yesterday. This was updated, but today it is down just a little bit. And even though I don't particularly like care to listen to Greg Manarino because he's kind of like a grumpster, I feel like he's kind of grumpy guy. Even though I think in the big picture, what he's talking about, love people, care about each other, and things like this, I really admire that, and I'm using his work. It seems like he's got pretty a fair amount of accuracy in things that he's saying. It's kind of the delivery that sometimes like it's sort of depressing that his delivery. It feels kind of grumpy, and he feels. But anyways, nonetheless. Um, was a waste of time to talk about that because this MMRI, I think it works pretty darn well. We got the stock market, a lot of people wondering what's going on in the stock market, and the risk is it's high, right? We're in high risk, but it's not as high as it was. It's high risk that's slowly kind of been moving down. Now things could change at the same time. While that's going on, there is there's a gentleman here that have not signed up for anything paid yet. I've just been learning from his free content, and so far it seems pretty accurate. Seems pretty accurate. It really seems like trying to get an idea from the MMT perspective of how money is going to move in the stock market from this MMT perspective in correlation. Trying to learn that, trying to understand that, and attempting to use this. These two things have me kind of thinking that even though the stock market is bad, or excuse me, the economy is bad, in my opinion. I know supposedly if you talk to a Republican, it's the greatest economy ever, and if you talk to a Democrat, it's the worst economy ever. And all you have to do really to get that to reverse is just change the person who's in office. It seems like you can have the exact same policies, the exact same results, but the people that are saying it's the worst, they're going to say it's the best, and the people that are saying it's the best, they're going to say it's the worst. Just kind of, it's kind of like you're just switching those. You're just switching the label, and then because the label changes, somehow their opinion of the situation changes. And where am I going with this? Oh man, where am I going with this? I don't know where I'm going with that. Other than saying like something along the lines of, I personally don't think the economy is great, and I don't think it would be great. I don't think it was great under Biden, and I don't think it was great under Trump before. And I don't think it's great. I don't think it was great under Biden afterwards. I don't think that was the greatest economy ever, and I don't think now is the greatest economy ever. And I don't know when there was the greatest economy because I'm only 48 years old. The United States is considerably older than me, and I apologize that I have not been alive long enough. Because if I was going to really tell you and really have an opinion, and And I'm politely, hopefully, delicately letting you know that I feel the same way about you for this. If I'm going to have a really, really good opinion on the US economy and how well is life here in the US, don't you think we should be have been alive from the beginning of the course of US so we'd really know what we're comparing it to? Because granted, my sample size, it's only 48 years out of like 200 or something like that. And I know I'm terrible because I don't know exactly how long the US has been around. And I agree, I am a pretty terrible person for not being smarter. I'm trying to get smarter, bear with me. Uh, but I've only been around for like a fraction of that time. So I really can't compare the level of happiness and the quality of life. And I don't mean because there was a car and there was a horse. You could have a car and be a really miserable person. In fact, it seems like there are a lot of really miserable people around in 2025, and we got cars. So, there might be something more to quality of life than fancy gizmos and gadgets that go wiggly wobbly, whipper whopper, or whatever they're doing. You can plug your finger into the toaster and then you can fill up the bathtub with your smart finger connected to your smart home. Great. That's great. Does it really mean that there's some sort of greater human experience? I don't know. I would have to have been alive for every year of the US to give you the actual a real opinion. Now, since I haven't figured out a way to do that, the next thing I could do is I could study the heck out of every year of the US. And you see, like, you can tell I'm not studying because my vocab is not that good. But I'm pointing myself out for this first, but I want to let you know it. I know you probably don't care, but I'm going to let you know anyways. The same is true for you. That's how I feel about you. How do you know this is the greatest time has ever been in U.S.? Have you been alive since for every year this has ever been in the U.S. history? No. If you haven't, then your opinion just went down in credibility to me because if you haven't experienced it, then it's just theoretical talking, right? So that's what I really went off on a tangent there, and I really don't know why. Somehow MMT stuff got me off on a tangent, and that's the danger of MMT. It can get people, you know, uh, all wound up. So I guess I'm really not surprised that when the MMRI seems to be going down slowly, seems to be less high risk than it was previously, and when there is um, when there's a totally different criteria out there, Mike Norman, MMT, who I don't think would agree with Gregory Mannarino. I think if we put them together in a room and they had a conversation, I think they would argue more than they would agree. But yet, their work is both agreeing on the same thing. That is what I really find beautiful in being able to take in information and not being dogmatic. And I cannot say that I'm never dogmatic and I always am open to new information. I can't say that's true. It's probably not true. I can say that I'm doing my best to be open to new information and look at different things. And here is a benefit. Here's an example of a benefit that I get with this. This is not the only time things like this have happened in my life. There's been times when I've been open to learning from in a different subject outside of the stock market. The same thing. I'm learning from different groups of people that when if you get them in the same room together, they're going to argue. But yet, in the basic premise, like I'm seeing similarity out of what they're saying. So that is what I'm seeing going on here. So I'm not actually surprised that the stock market is still held together. Also, I learned quite a while ago that the economy and our individual experience of what we're experiencing in the economy is not actually as connected to the price action of the stock market as it used to be in the past. Some would even go so far as to say that there is zero correlation between the economy and the stock market now. Now, I'm saying some would say that. I'm not saying that. I don't know where the percentage of correlation exists. Is it zero? Is it 100? Is it somewhere in between? Well, I don't think it's zero correlation, and I don't think it's 100 correlation. Just I think it is somewhere in between. 50? I don't know. 20? I don't know. 70? I don't think so. It doesn't seem like it'd be 70. Seems like it's closer to the zero end than it is the 100 end, but exactly where, I don't know. But again, there's all this turbulence going on in the United States. Like when I hear people watching the news is just reporting a lot of turbulent stuff. And so, why is it that the stock market is not reflecting this turbulence? You could say, well, it just dropped down the other day or the other week, and so that's reflecting it. Uh, yeah, on that time frame maybe, but the turbulence that I'm referring to, the kind of social turbulence that I feel like is that I've been witnessing for a while. That type of that type of turbulence to me does not explain this. Like this. Like this. Look at this. Whoa. I get it. Whoa, we went down right here, but it's like from here to here is up. And the kind of social, economic, societal, political, whatever the right adjective or noun is, however that's supposed to be said, like if there's a high correlation between a good US economy, a thriving US economy, a thriving US society, and the stock market, then it doesn't seem like we'd see this when this is the highest amount of polarization that I've ever experienced as far as living all my life in the US. So if we're at the highest point of polarization in my almost 50 years, but we're also at the highest all-time highs of the stock market. So what is that telling? What should that tell you? If I'm not beating a dead horse already, hopefully I am. If not, hopefully there's at least one person out there that I help out with this. There's not a correlation, or there's a low correlation. You can't look at the economy, you can't look at what's going on in society and say like those you can do that, but you cannot take what you see in your opinion of your judgment of American society or the world or whatever. You can't take that and assume that good or bad judgment is going to coincide with the stock market because obviously it doesn't. Like there's a lot of people, there's people like saying that our democracy is at stake. That's a very, very, very drastic thing. And so because now just to be clear, I'm not saying it is at stake. I'm not saying it isn't at stake. I'm saying that someone said it, that there's been more than one person. And I'm using this as an illustration that these are very polarized times. Right? So please do not put me in a label other than you don't like. If you want to put me in a label of me not liking politicians and politics, great. I fit that label. But anything else, I don't really fit. So um, I would consider myself a business guy and an investor, and that's that's what I feel like I am. And obviously, just like you, I didn't choose to be born into this sort of monetary society. I'm born. I'm just dealing with what I got, and so if society is kind of falling apart, but the stock market's going up, then that should give us a big clue. It should be a big wake up call that there's there is a disconnect here, and that if you think that they're somehow connected, you're wrong. So why should we not expect the stock market to go up or remain more on the upward bound under these crazy polarized outside of the stock market situation? We shouldn't be shocked. We shouldn't be surprised, even though even though probably unemployment's bad. In one way or another, I keep seeing articles about layoffs. And just by being around my old hometown after being gone for about 25 years, it's there's more business. There's lots of empty businesses. Lots of retail type of uh, commercial retail structures that don't have thriving businesses in them, don't have businesses in them, and the ones that are in them sometimes don't look that thriving. And but yet we're at these all-time highs. So how do you make money with that? How do you take what I'm saying and make your life better with that? The very first thing that I would recommend, I would like to say that you have to do, but you don't have, it's not a have to. It's a recommendation. The first thing that I recommend is that you start really getting a grip on your monthly expenses and your monthly income and your monthly expenses, because that is really where the magic is going to happen. Even though there's this high amount of political polarization, societal upheaval, whatever the correct buzzword, buzz term is that I need to use for you to somehow gain some interest because I said a trendy word. So please put that trendy word in there for me. And the way to make a difference in this time is by understanding how much money you got coming in and how much money you got going out. And it might take a few months to get it down, but that's all right because guess what? A few months are going to happen anyways. Whether you watch TV, whether you don't watch TV, these few months are going to pass. Whether you spend time with your family, whether you spend time with people that you can't stand, it's going to pass anyways, right? No matter how you spend the time is going to pass. So you might as well spend it getting some stuff done that's going to help you going forward. So with this, what I like to do too is I like to add an accounts part. And so then, like today is 10, 21, 25, right? So I'm going to log into my whatever my first account is. If I only have one account, I'm logging into that one. But I have more than one account, so I log into my first one and I put down the number of the balance there. And then in parentheses, well, let me wait on that. Then I like to put the time. So time now is 4 4:16 p.m. You don't have to do that. I like doing that. It's old. There's some reasons why that are older that might not be applicable anymore to my personal situation. And I like to put a space between here, but whatever. If you got a second account, like let's say you got a checking account and you have a credit card. So it's just real simple. Two accounts, checking and a credit card. So here's the money in your checking account. How much money do you owe on your credit card? Let's say you owe $400. 400. Of course, we got to put our time. We don't have to, but I'm going to put the time. Now, since I owe this money, what I personally like to do, maybe you can't do this. If you can, it works really nice, is I will take this, I will pay off my credit card as fast as possible. So I don't pay it off once a month. I pay it off almost every time it posts. So even though my, so the money is coming out of my checking account almost as fast as if I was using a debit card, but it's not as fast. I use the credit card. It takes a couple days for that purchase to post onto the credit card. And then I will take money from whatever account I use to pay the credit cards and I transfer it over. Almost the same, if sometimes the exact same day that it posted. So what ends up happening is that then I will do something. Let's make the math super, super simple here for me. Let's say if you got 10,000 and then that's how much I'll have after I make that payment, right? So it's kind of like I'm bookkeeping. Maybe I am bookkeeping. I don't know. I just started doing this to really try to make sure that I knew how much I was spending. And it was from playing the Rich Dad Cash Flow game. You can go to richdads.com. You can you can create an account here for free and you can play this game for free. And it was from playing this game over and over and listen and hearing this guy say, he doesn't say it in the game, but I heard him say, "How can you win if you're not keeping score?" And from playing this game and hearing that this book was really not a book on business, it's not a book on money. It's, well, I guess in a way, it's a book on accounting. I heard some people say. And so I'm like, all right, okay, if I can't win if I don't keep score. So how do I keep score? So I started putting this together in a haphazard way. But once you know, like for example, utilities. Well, what do I have under utilities right now? I got a phone bill for 45 and and I got internet for 120. So 165 total. Right? So this is going to come at a certain time. That's why I like to have one more tab with monthly bills and I have the dates down. But now I see I need to make 164 bucks just to pay my internet bill and my phone bill. Then they're going to have these other bills. But now we've got something to shoot for. And here's $164 that we need. But look at this. Yesterday we came up with a trade that gives us that, but it does not give us the insurance, the tax on, if I generate this money out of the market, then I also need to pay tax on that money that's being generated. So I want to generate a little bit more because I know I'm going to pull the 64 out. So I can take 164 times 20%. I'm just giving myself something to work with, 20%, and um, and go from there. And what would go from there look like? If you were completely new to this, completely new, there would be two things at the same time that I'd be learning how to do. The first one is going to be just learning, and that is learning how to sell a cash secured put option on a stock that you'd like to own at a price that you'd like to own it at. That would be the first thing. Now that's the learning part. That what you can do on the action part that doesn't take as much learning is start building positions in the stocks that you're going to sell cash secured put options on. You don't need much money to buy one share of MO. You don't need much money to buy one share of Coca-Cola. You don't need much money to buy one share of FCX. Now, if you're telling me that you don't have, that you really actually, I don't understand, and your situation is worse, and you don't have, you can't somehow come up with 70 bucks, then I'm not sure what YouTube channel that you need to be learning from. The people that I can help are have figured out how to get together at least 100 bucks. If you haven't figured that part out, maybe the guy Micro from Dirty Jobs, maybe you got to do that. I don't know what, but I'm assuming you can figure out how to come up with 100 bucks. If you can't figure out how to come up with 100 bucks, I don't know how you're going to figure out how to come up with 5,000. And if you can't figure out how to come up with 5,000, I don't know how you're going to come up with 10,000. And if you can't come up with 10,000, you see how the math goes, right? You see how it goes. So if you can't figure out how to come up with 100, and I don't know what to tell you other than I guess what I will tell you is aloha.